Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for February 4th, 2018. Hope you guys are having a great weekend, and I've got a lot to talk about today, so I'm glad that you all are listening in to this specific video. First and foremost, let me take care of a little housekeeping. If you are a normal listener of the FACE webinar, that's the ForexAnalytix Community Experience webinar, the link has changed. We had to accommodate for all the new viewers each and every week, so we had to get a new link. So you'll see the link right here on my browser, but the link will actually be in the description down below on this YouTube video. So make sure you register for the new webinar. It's the exact same times, the exact same people. Nothing's changed but the link to log in. So if you guys and gals normally listen to our free daily webinar, which you'll find myself there, and Steve and Dale and Stelios and all our team, and all these interviews and all the ones that you can see in the YouTube, our YouTube our YouTube channel as well. Make sure you click on this new link and register. We had to do that because of the number of registrants that we've had. So make sure you do that. Okay. Second of all, if you guys haven't tried out ForexAnalytix, it's only $1 for 10 days. So sign up, try it out. And then when you do that, download the mobile app with Google Play Store or the Apple Store and get it on your mobile device so you can get all of our notifications delivered to you while you're on the go. And I'll tell you, it's something that I love when I'm out doing like sports in the evening during the Asian hours. If something breaches a support and resistance level, or I get a new update, it comes right to my phone. It's much easier for me because I tend to do more managing trades when I'm mobile, but when I get a notification, it helps me look at the charts and get a different viewpoint. So try it. I think guys are gonna love it. And okay, so let's go. And once you do that, you'll log into the overview page. And I think what we have to talk about first and foremost is the elephant in the room. The elephant in the room this week is actually the S&P and what's happening in equity markets globally. So, if you use ForexAnalytix, you get obviously our S&P analysis with candlesticks and Elliott waves and whatnot. But I'm just going to take you through a basic chart. I'm going to go over to the weekly chart, and you'll notice here on the S&P, we hit a fib level, but more importantly, look at the candlestick development of the weekly S&P. It's ugly, right? And if you're watching the video last week, we talked about the S&P having equal length moves. This is a weekly chart from last week. You can see we did the spike low following the that was the flash crash. Actually, the flash crash was right here, but a few weeks later we actually posted a low to the high in 2015. Then the low in 2016 matched from a distance standpoint the highs that we had last week. So now we saw this key reversal, and it's interesting. I was talking to a pretty big wealth manager here in town. He's a friend of mine I've known for years, and I was at a football game yesterday for my son's football game, and he was there, and he's like, it's interesting. I've got 4 appointments of wealthy clients that want to actually come in and see me on Monday now. They called me on Friday and said we need to set up an appointment immediately, and so what that tells me, and obviously it was because of the stock market move that happened at the end of the week. Wealthy clients are now wealthy individuals are starting to take notice of that was a pretty big decline. So, and if you're looking at the S&P, you go, wow, okay, that's great, but what I should do is take you over to like some other markets too. Let's take just a quick look. We can look at the DAX, and you can see the DAX. This was a pretty key development in the DAX too. And we do cover the DAX here at ForexAnalytix, but look at the false breakout above the highs, a megaphone pattern we've reversed, And so we had and if you've been reading the analysis here, it's range lows are now within view at 12,800. This is February 1st, and this is, I think it was supposed to be written now support. The DAX will want to see a close below. However, the false breakout higher suggests that we will break through support eventually. That was February 1st, and then our analysis now, as you can see, that was right here, and we plowed right through that support, clearing it and actually closing below it and below the 200-day. These are things that, obviously false breakout below the 200-day, we close below the 200-day. That's not good. That's not bullish. Right? Okay, and that's the DAX. But I'm going to actually take you over even to some other markets. Let's take a look at, and some of the ones that we don't cover, but I thought I'd bring them to your attention right now. Let's take a look at the Nikkei. Okay, so here's the Nikkei. See, the Nikkei actually post a pretty big reversal, and this was actually showing us the way several weeks ago when we broke out of this channel. It was very divergent. We broke through the breakout point last week, and now the Nikkei is actually showing a pretty big reversal there. Take a look at some of the European markets. Let's take a look at the here's the Spanish market. Look at the IBEX. Yeek, right? And this market hasn't even been following the other U.S. markets higher. I mean, we failed to make new all-time highs here. Here's the CAC 40 out of France. That's coming up here in a moment. I don't know why that's not launching, but let's pull it up. Okay, here it is. CAC has reversed as we have been making new relative highs, but relative strength wasn't. So that's not pretty. Here's the FTSE. Big reversal out of the FTSE, and that, I mean, these European markets were showing reversal well before the U.S. counterparts. Look at the Shanghai market. This is the composite, and we've had a very much lack of follow through in the Chinese market. So all these markets are starting to show signs of weakness, which, as an FX trader, you gotta ask, well, what is going to be the response? And so I'm going to take you back over to ForexAnalytix, and let's talk a little bit about some of these European currencies and some of the majors actually. So let's start off with the dollar. I guess the dollar is a great place to start. I think I just flipped right past it. There it is. So here's the dollar. The dollar hit a confluence of fib levels this last week. We've been following this really tight channel down, but when you get into a risk aversion type of market, that's when people start to say, you know what, get me out of everything and put me into cash. Cash, excuse me, cash for most investors might be the dollar in this case. So I've been, sitting here trying to figure out what is going to cause a dollar rally. Well, first of all, if you haven't seen bonds moving lower and yields going higher, which hasn't affected the dollar up until now, yields continue to rise, but the dollar had been under pressure. But will that give way with some risk aversion? You get some risk aversion, and perhaps we see bonds get bid, yields go down, but the dollar goes up now because people are a little risk averse. When people go into cash, they might say, hey, just put me back into cash. And like I said, most people, that might be put me back into dollars. So the dollar index is at risk, I think, of a continued bounce. Now, you can see the way the dollar is responding against some of these majors, like the commodity currencies. Here is the Aussie dollar. Aussie dollar popped out of its channel on Thursday. We're breaking down now, so you can see the Aussie dollar is actually breaking lower. Here's the Kiwi. Kiwi's going to show you a very similar situation. We were following this up channel. We finally have started to break out, got a little bit of a triangle here, but the Kiwi looks like it wants to give up some of these gains. Take a look at the Canadian. The dollar Canadian, we had a descending wedge, and now we popped out of the descending wedge. Okay, and the dollar Canadian, as I even mentioned, I believe last week, if you were listening to the week ahead video, I think I did mention if the dollar starts to rally, you're going to start to see it rally against maybe the Canadian first, because the dollar has held up much better against the Canadian than it has against the other commodity currencies like the Aussie or the Kiwi, the Antipodean ones. Let's take a look at the euro. Okay, here's the euro dollar. Now the euro, I'm actually going to have to take you over to a live chart because I actually want to show you something a little bit different with the euro. But the euro is, struggling with these highs, but still, I'd say the euro is outperforming. We are at, and let me take you over to something so I can draw a little bit. Here's a weekly chart of the euro. I want to stop here and let's get rid of some of these fibs. This is just a little bit of a mess. Okay, if you can see from the 160 highs to the lows at around 103, we've hit the 38% retracement and we're struggling. Now, can the euro make one more stab higher? Sure. And if it does, keep in mind that there's a multi-year trend line that comes into play just around the 126 level. So even if it does push new highs, how much higher is it going to go? And if the euro does reverse, that means the dollar starts to see a rally against the euro. That means the dollar is probably going to start to see a rally against other currencies as well, like the Aussie and the Kiwi and the Canadian. And you can see the Mexican peso had plunged again below the 200-day, but rallied back. And we're challenging channel resistance here. And I guess I should probably look at the cable as well. The pound dollar also is holding majority of its gains, but we're still at the 78% retracement of the post-Brexit move. Here's Brexit, right? This is actually Brexit, but this is the post-Brexit move, 78% retracement, and we're starting to struggle. So if the dollar really starts to show some strength against these European currencies, it might really show its true colors against some of the others, like the Aussie, the Kiwi, the Canadian, the peso, and maybe some of the other emerging market currencies too, like the Turkish lira or the South African rand. Might be something to pay attention to. All right, a couple of things that are happening this week, guys. So we have our ISM services data that's coming out on Monday, since we already got non-farm payroll, but we'll get the services ISM. We also have Australian retail sales and an RBA decision. Matter of fact, we have 3 central banks meeting, all of which that we are not expecting any movement from a rate standpoint. But the RBA meets on Monday night, Tuesday morning out of Australia, but Monday night for those of us in the US and in Europe, it's going to be really early in the morning. Tuesday, New Zealand employment data. Then on Wednesday, we have the RBNZ decision. And again, not expecting the RBNZ to make any moves on rates. We then have on Thursday, we have the UK Bank of England interest rate decision, but probably more importantly, the inflation report. So it'll be interesting to see if that moves the cable at all, even though we're not expecting the Bank of England to move. But if they signal maybe a more hawkish stance, that might actually, obviously, or a pickup in inflation, that might be the driver that drives the pound into new highs. And then on Friday, we have Canadian employment. So it's actually a very busy week for the FX market. But like I said, really the elephant in the room right now is going to be the S&P and the equity markets globally. How do they respond this week based on the key reversal patterns that we saw last week? And I think they were key, but if we get any follow through this week or not, it'll probably tell us a lot about how deep of a pullback we might get in the equity markets, or if it's just going to be a little, just maybe a little blip in the grand scheme of things, but it might actually end up being something bigger. But we have to watch price action. Oh, one last thing I should point out too, Bitcoin has made a really big move. We cover Bitcoin and Ethereum, but I want to take you over to the Bitcoin chart, and you can see we actually found support at the 200-day moving average. I know a lot of you might ask, well, hey, is this it? Have we seen the complete correction here? I still think that we could actually see channel lows around 6,000. We've given back this whole body of support. We've given back this whole body of support. And move in November, December, we've given it all back. I think that Bitcoin could continue to pull back, and I'm not going to give you an argument of how I believe or do not believe in Bitcoin. But I guess the one thing that people are probably asking themselves right now is it the technology I want? Because I can't really use Bitcoin for much of anything else. I can't use it to buy clothes, food, water, shelter. So it's going to be interesting to watch what happens in the Bitcoin space or the cryptocurrency space over the course of the next 6 months to a year. Guys and gals, my name is Blake Morrow. If you love this video, make sure you click the icon down below, that says, hey, a little thumbs up button, say that you like the video. Also subscribe to this channel too, so this way you won't miss any of the events that we have throughout the course of the week, any of the great interviews that Dale brings on. We have some great people in the industry each and every week, almost every single day. And remember, we do have a new link, so if you go to register Monday morning, you are going to have to click on this new link. So you have to re-register to get the sign on. And again, that link is down below in the description. Guys and gals, have a great trading week. And thank you again. My name is Blake Morrow with ForexAnalytix.